Hello and welcome to Explain the Charts. Today, February 12th, 2025, we're looking at USDJPY, the US dollar versus the Japanese yen. Recent news reports highlight a strengthening US dollar against the yen, driven by factors such as widening US-Japan yield differentials and positive US inflation data. This bullish sentiment is reflected in the current USDJPY exchange rate, which is trading above 154. Some analysts believe that the USDJPY could experience further short-term gains due to an overall optimistic view of the US market. We need to look at the charts to further inform ourselves. Let's examine the daily chart for USDJPY. The overall trend appears to be bullish, with the price consistently making higher highs and higher lows throughout the period displayed. We can observe a steady upward momentum that is strong. However, let's zoom in on some specific areas. Here, we can see a significant price drop around November 2024. This could have been triggered by factors such as unexpected economic indicators or geopolitical events. The price then stabilized, forming a base of support before resuming the upward trend. Now, let's switch to the 1-hour chart to get a closer look at recent price action. The short-term trend is also bullish, with the price fluctuating within a narrow range, but ultimately trending upwards. We notice periods of consolidation followed by sharp increases, signifying the market's volatility. The 15-minute chart will provide even more detail on this volatility. The 15-minute chart for USDJPY shows even more short-term fluctuations. This chart gives a detailed look into the many small price changes. This rapid price action emphasizes the need for cautious risk management in short-term trades. We've identified potential support levels around 148 and 150 on the daily chart, and resistance levels around 152 and 154. These levels are significant areas of previous price action and could influence future price movements. Short-term, there's a higher probability of further price increases as the trend remains bullish. However, there is always risk. Breaks below the support level would signal a possible reversal to the bearish. In the long term, a continuation of the upward trend is possible, assuming that the overall bullish sentiment prevails. However, changes in macroeconomic factors or global events may significantly influence this. Key levels to watch in the coming days are the support level around 148 and the resistance level at 154. If the price moves above 154, it could indicate further bullish momentum. Conversely, if it drops below 148, we may experience a bearish trend. The 1-hour and 15-minute charts can be used for confirming short-term trends and identifying entry and exit points. These levels are dynamic and can change based on the market's prevailing conditions. Remember, this analysis is for educational purposes and should not be interpreted as financial advice. Always conduct your own research and manage your risks accordingly. Thank you for watching Explain the Charts.